What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock, what you should be looking out for the future. I'm also going to break down the opening of Tesla and also what's going on with our technical indicators and help you understand how to use them and how to better understand the price action of Tesla on a daily basis. You could also use these indicators for any stock out there because it really helps you understand the price action and what's actually going on. Now, the reason why I'm recording this video in a very different format and different time is because I'm going to be unavailable just for this evening because I'm going to the dentist for a consultation appointment to get my wisdom teeth removed. So with that said, I'm going to be unavailable temporarily, but in the meantime, I'm not going to really let this stop me from kind of like sharing more content about Tesla and what's going on right now. So I'm going to record this video and help you understand all the important information you need to know. Now, before I break anything down, before I get into any details, firstly, I'm not a financial planner, so don't take any of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks. One of them could be a free Tesla share, so please check it out before they run out in 2 weeks. With that out of the way, let's get on with the video. So when we dissect Tesla's share price, we can see some very interesting things here. Tesla's up 3.59% as of right now, a little bit green in the after hours as well. But one thing that does have at least somewhat of an effect on Tesla is the overall market, the broad market, and the SPY. And the SPY, NASDAQ, and QQQ, these things are kind of like running in unison. So understanding their price action could actually help you understand Tesla. And I really believe that when you are trading, it's important to really understand what they're doing, at least watch them on the sidelines when you are trying to trade Tesla. Because right now, when we zoom out, we could see that the SPY has been bouncing off this trend line right here. I mentioned that earlier. We just bounced and bounced and bounced. And quite recently, we came very close to the trend line. We kind of dropped a little bit below it, but then bounced right back, which is completely fine. We have a doji right here as well, which is typically an indication of a trend reversal. So I am hoping that SPY does get a bit of a reversal. If not, guys, you have to watch for how it reacts to this and keep this in your mind, because if SPY breaks below the trend line and holds, I would say like around 390 or below, if we just hold that, we don't get a big bounce to the upside, the market could get very bloody from there, and that will negatively affect Tesla. Now, as far as Tesla goes, please note that right now, SPY does not look like it's going to just start crashing immediately. It looks like it's holding support all right. And we do have a doji right here, so I am hoping that we get a bit of a bounce from there. We are still kind of oversold compared to this run over the last couple of days. I can actually bring up the RSI just to show it to you. So we're not like completely way overbought just yet. It does look like we have a little bit of room on the RSI. Unless the market decides to start pricing in a more hawkish Fed, then things could switch. But right now, I'm just not seeing that. So with that said, let's transition to Tesla. Because let's just assume that SPY is going to do okay, this would leave a lot more space for Tesla to continue on its run to the upside. So key zones to watch for, we have resistance at 305 to 306, then 309. If we don't break 309, we could get rejected there. If we break it, then we have very strong resistance around 312 to 314. We have gotten rejected off 314 many times if you look at the chart right here. So right here, previously, we have gotten rejected off 314 in the past, so please be very careful at that level. Now, if Tesla does end up coming down, if SPY somehow gets like this big chop, if something happens, watch 300, 295, and then 290, all right? So I mentioned most of this in my previous video. I want to transition to something else now. So what is the trend kind of like telling us in Tesla? And I want to talk about how kind of like predicting the price on a daily basis does not always work if you're trying to trade. And that's why it's important to understand your technical indicators. It's important to understand what they're telling us and what on earth the story is showing today in the markets. So if you're new to trading, there are some things I want to say, and I want to make it clear I'm not giving financial advice. So one thing that someone told me is that if you can't make money with paper trading, then why even jump into the markets with real money? And I think he has a good point when he said that, because when you are trading, there's a risk involved and it becomes way riskier. It's almost like gambling if you have no idea what you're doing, right? If you don't understand the price action, the indicators, you're low-key gambling. Right? If you don't understand anything like that. So that's the reason why if you go on certain apps, I think like Webull or even like Thinkorswim, I think on their online version too, you could go on these apps and trade with paper, which means you get like a virtual $1 million, a virtual however much money you want, and you could practice trading with that money so that you become better. Now, when you do start trading, let's just say you are consistently profitable, you have to understand that to get there, you have to understand your indicators. You have to understand the price action. The first thing to look at is support and resistance levels. Where does Tesla have resistance? Which levels does it struggle to break at? Which levels have more buyers? Because the market is just a war between buyers and sellers. Now, another big important thing about trading is your emotions are so powerful. Panic in the market is huge, so is FOMO. That means that a lot of buyers step in when we see these big moves to the upside. Sometimes you could see a lot of panic when we see big crashes, just like when we had that big CPI report that was actually really bad. So much panic came. Tesla took a big hit, so did the overall market. Now, with that said, I want to just briefly go over some technical indicators and how you can actually use them. So, one of the most important things to always be well aware of, I don't know what I'm saying, is the volume. All right, you have to watch the volume all the time, or at least for the large majority of the time, because it'll really help you understand whether we're getting lots of volume to push us up. On the daily, you could see Tesla recently got a big spike in volume, which is a good sign for it. But if you were to watch this like on, let's just say, a daily basis, what you could actually focus on is, are we getting a big spike in volume when we are pushing up? That's often an indicator that we are going to see some nice price action from there. So what I'm going to do is I'm going to hide support and resistance levels. Typically, when you trade, you could keep them on there, and most traders typically do that. But just for simplicity, I'm going to remove them so you can clearly see what I'm talking about. So let's use this as an example. The previous day, Tesla's pushing up slowly. Look at the volume. See these bars right here? We had lots of bullish volume right here. We saw lots of buyers stepping in. We saw lots of call buying from a lot of traders as well. So big volume pushed the price up, and that's why it was looking pretty bullish. Then notice how it was starting to come down at this resistance level, right? We had the previous support and resistance levels, and obviously it ended up going a little bit above 305. So what I'm essentially saying here is it got a rejection of the resistance right here, and then the volume starts to come down. You guys see how the volume is dropping right here? This is often a sign that it's not showing as much strength. So going back, we can actually close that volume and we can actually see the volume right here. It's very small. I think you have the option to delete it, but I always recommend having it to the sidelines so you can always see it. And you're going to have to get used to actually being able to tell what it's going to do quite quickly without having to spend too much time looking at it. Now, as far as technical indicators go, there are all sorts of indicators you could use and combinations of them. But one of the important things to do is to keep trading simple. And I think my means are not like extremely simple, but in my honest opinion, they do work for me. And what works for me is not guaranteed to always work for you, because trading also involves common sense, a lot of thinking about what the price action is doing for you to actually succeed with it. We can't be like robots and say, oh, the indicators are telling one thing, and then, just jump into plays, just kind of like chase for money without hunting for the big moves. So let me show you what I'm talking about. So when it comes to the 1348 EMA cross, does it always work? And the answer is not always. Because let's just say you were trying to just like buy in during any of these crossovers or sell during any of the crossovers, it's not always going to work. It won't always work because of the fact that those alone are not all there is to the price action. So that's the reason why it's important to have other indicators, understand what the action is doing to understand it. And let's actually go over an example. So another important thing is the time frames. Each of these candles represents 5 minutes worth of time of price action. And I highly recommend studying candles if you want to get into trading. Now, one thing you could do is you could go on like Webull or other apps. You could kind of like form a grid like this, or you could form like a 2x2 grid. And you could look at a bunch of things at once, right? And I know it can become kind of overwhelming for a lot of people, but it's also very beneficial. So if you wanted to like simultaneously watch The Spy and Tesla, you could kind of like set your thing up like this. If you are using a computer, it's a lot feasible, but other people like to use different screens. You can also do that because everything is kind of clustered and really, really put together. And you don't really see the MACD as easily. But anyways, you can actually trade like this if you want. It's just an option. And you don't have to have 4 screens at once. You can even have like 2 screens at once and still do pretty well with it. So we can even like trade like this. And when you trade like this, you can have 2 different time frames at once. So each of these candles represent 3 minutes. These represent like 5 minutes. And you can actually use them to better understand what's going on. So anyways, I just wanted to show you guys that real quick. Now I want to transition to this part. All right. So how would you trade Tesla? It's, in my opinion, the way I do it is it's kind of like telling a story about what the stock is doing. What is it showing you? Is it showing strength? Is it pushing up? Is it showing some weakness at a certain zone? If it's showing weakness, am I able to enter, a put position? Can I sell covered calls here? You have to understand how options work, what selling a call means, what buying a call means, what selling a put means or buying it. You have to understand all of that, and you have to study it like a lot to like really understand what we actually mean by selling a covered call, because there are differences out there, the different strategies people use. But to make this simple, guys, let's just go over this real quick to help understand what the price action shows us. So one interesting thing is the EMAs are often used as support or resistance levels. They could also be used as buy signals or sell signals. Now, they're not all you use, which is why I have other things as well. But what I tend to use would be our MACD. This shows momentum. RSI, which is known for its strength. It really shows you how strong a trend really is. We have our VWAP. I know it's a funny word, but VWAP is often used as the volume weighted average price. And this is actually used by institutions. So what they do is when the stock price is pushing to the upside, we sometimes see the price end up testing the VWAP. And that means that institutions, they basically let the price go up, and then they start bringing it down to this level, which is an average price, to make money off of it. Then you have these EMAs. We know about 1348, we know 200. 200 could also act as support or resistance. So once you have all of this in your mind, I know it's a lot. Let's just make this simple. How do you put everything together? And here's where I'm going to actually transition into that part. So let's look at Tesla's price action just like this. All right. So Tesla, let me see if I can make this bigger. I think this would be better for you guys. All right. So we had Tesla. It opened right here. Down, down, down here. Right? We had nice green candles. You need to study the candles. We were showing very, very large candles with small wicks, which is often a bullish signal. The MACD right here was wide open, showing lots of bullish momentum. The volume was very green, looking very strong right here. And RSI, which you'll notice is RSI was kind of overbought temporarily, but the price kept going up. It cooled off a little bit, and it really cooled off the RSI, got a nice bounce off that. And notice how RSI went a little lower right here, which shows lots of strength in Tesla. So lots of strength, very, very nice price action. You could see we basically touched the VWAP. Then we got a big push all the way well above the two major lines. So the blue line is known as the VWAP right here. This is used by institutions. You're going to see how they could use it sometimes. Then we have the red line, which is the 200 EMA. All right, so notice this. Tesla was looking bullish, and a lot of people could have actually noticed that Tesla was looking very bullish, got into calls off this VWAP bounce, and they would have gone into calls and they would have rode this thing all the way up. And once we got to like 306, notice how we got a rejection, we got a retest, another rejection, kind of like a retest, and we were showing lots of weakness at this point. How could we have told that? Well, one thing you could have done is looked at, let me see if I can find in my drawings, right? Our support and resistance levels. I know the chart looks overwhelming, but once you start trading a lot, you can get used to it. Also, other people tend to maybe not complicate it as much as I do, so I apologize for that. But notice how when Tesla went up to this level, all right, it was showing weakness. And then you'll notice that over time, it was struggling to break that. The volume was coming down. See how the volume was dropping? We got a MACD signal line crossover, so the bearish momentum was coming in. RSI was starting to drop while Tesla was holding this level, which is showing that it wasn't showing the same amount of strength as before, and it was starting to come down a bit. And then notice the 13 EMA, because this moves faster, because it technically is an exponential moving average over a shorter time frame. It starts curling. You guys see this? And when you get these crossovers, this is often the sign that it's going to come down. And you guys can see how that really played out. That's a bearish signal. But we could have foresaw this beforehand, because the MACD was wide open, looking bearish. RSI was coming down. The price action was becoming choppy. And what else you'll notice is look at the blue line and the red line. What do you guys see? When Tesla was up here at 306, imagine we were just looking at the chart like this. All right, Tesla's like up at around 306 right here. You will notice the blue line and the red line, the 200 EMA and the VWAP, were well below the price. Why is that? Because Tesla was pushing up very hard in a short period of time. So the average price was still lower than that over the time frame for the VWAP. And that's the reason why Tesla was actually trading well above them. But what happens is institutions typically bring the price back to this blue line, and sometimes there's an occurrence where we retest the red line, the 200 EMA, right? And if we broke below it, that would be a bearish signal, a very bearish signal. And you'll notice what happened later on. If you had noticed that Tesla would come down, this would be an opportunity to open a short position, whether you're, selling covered calls or buying puts. I'm not saying you have to do that. You don't have to do it just for Tesla. You could do it for other plays. I'm just letting you know that the opportunity was there. So then Tesla starts coming down. It was actually trying to bounce off the 13 EMA temporarily, but once it broke below it, that would be a clear sign it was coming down. And we had all the indicators telling us it's going to come down, it's going to come down. What happened? We tested the VWAP. Do you guys see how we tested the blue line? We went from up here all the way down to the VWAP level. Then we came a little bit lower below the VWAP, but what did we bounce off of? This time we actually ended up bouncing before we hit the 200 EMA. We were just bouncing back and forth around the VWAP as time went on. And then we bounced off the 200 EMA, followed by a nice push near the very end. So you guys can see how we could have actually foresaw this if we were watching the chart, right? It is very possible for people to actually figure this out. People make a living trading. And this is just some of the very big indications that they actually use when trying to figure out what the stock price is going to do. Now, is trading possible? Yes. Yes, people make money. I make money off of it every single day on a weekday. So the thing about it is it becomes less riskier when you learn how to mitigate your risks, when you have stop losses, when you know how to get out at the right time, and when you actually learn and strategize before. So be sure to strategize, study your many technical indicators. I know that this video alone is not going to make you a great trader. It's going to require practice and patience and emotional intelligence and control. It's so, so, so powerful, believe it or not. So I hope that maybe I provided some value to you guys. I know some of these things may have sounded complicated and very tricky to understand, but I really believe that for some people out there that are interested in trading, once you study these indicators and you watch the chart and how it reacts, and maybe start off just trading with paper, so paper money, which is like trading on a portfolio that does not use real money, just as a simulation. Start off mitigating your risks. Don't go all in on one stock, and also be very careful with how you actually enter and exit opportunities, because one win does not make you the best trader of all time. You can become so overwhelmed by making like $100 or $1,000 in a day, but doing it consistently is what makes it very difficult. And to achieve consistent profits, it requires lots of intelligence in a way, lots of momentum, lots of hard work, lots of guidance in your lives, perseverance, and the will to never ever quit. Not to mention the fact that you have to be learning from your mistakes. You have to learn what went wrong, which is why you always have to look at the trades that did not go right. If you're new, do not be too mean to yourself if you mess up, because everyone at some point will mess up when trading. It's just how we bounce back from these losses and how we actually learn to mitigate our risks is what's very important.